If Bitcoin bears haven't suffered enough over the past few weeks, Bernstein says that Bitcoin's going to 200,000 and outline the path to get there. We love hyperbolic price predictions for titles, so we're just going to roll with that. But we have a lot to talk about with Bitcoin and, of course, the election, all of the appointments, and everything that's happening in macro. And I've got the best three in the business here to do it with me: James Lavish, Dave Weisberger, and Mike McGlone. Macro Monday, it's the best hour of the week. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel, hit the like button. We've got Dave, James, Mike. Dave is Scrooge McDucking there with his Bitcoins, just swimming through his vault of gold Bitcoins there. I love it. I love your new backgrounds.
Can only do it in the virtual world, Scott. In the real world, sailors buying too many of them. You just can't afford that much.
We are going to get there, but first we're going to go back to, now that we're back to a normal life to some degree, the election has set in, Bitcoin now trading kind of around 90,000. Mike, what are you guys looking at generally? What happened in the morning meeting today?
It was quite the good one. The consensus is the Fed probably is done easing for now. On one expects the core PC deflator to actually tick up. Fed FOMC expects it to tick down. The key quote from Anna was the Fed, Powell used that word careful too much, which is Fed speak for we're done, we're pausing. Expects the next unemployment number to be a little stronger to make back for the October weakness. And the key thing is the Fed wants to avoid one of the biggest mistakes in history when they were easing too much. And we kept getting inflation despite that American Rescue Act. So they're really cognizant of the fact that we're going to get some more fiscal stimulus, and they have to offset that because inflation's actually high above their targets. Ira Jersey said 447 is key resistance in the 10-year note yield. I point out that copper and crude oil probably likely to decline, which might solidify that resistance. Our key equity strategist, Jillian Wolf, just pointed out the tariffs, 60% and 10% in all countries are typically short-term inflation, longer-term more disinflation. I like to point out, we'll just read the book, No Trade is Free, and expect a pretty hard sledgehammer on tariffs. And our chief FX strategist says she doesn't see what's going to stop the dollar bullish for now.
Dollar going up. That's interesting. I think a lot of people are looking for sort of the dollar to head back down after all of this sets in.
I do. One thing I want to add to it, I do enjoy that. It's a thing every single time I hear people say bearish things about the dollar, I'm like, look over at crypto dollar. Still, what's the most widely traded crypto? It's still the dollar. And I mean, that's just a technology paradigm shift.
Yeah. If you're looking at the interest rate probabilities for Fed funds futures, the probability of a cut in December, which is December 18th, right, is it's down to 58%. So, the economic numbers have been strong enough. And I agree with Mike. I mean, like, inflation's been sticking above 3%. It's been stuck there, which is, it's only 1% higher than the 2%, but that's 50% higher than what they, what their so-called target is. So it is going to be interesting. The long end of the curve is not slowing down. I mean, what's the 10-year at today, Mike? Is above 10 yet?
446.
It's about 450. It's 445. So, I mean, it's right there. So, I mean, the bond market is telling you continued expected strength and higher inflation expectations in the long term, period.
And James, we had CPI and PPI both up, even slightly, or at least versus expectations last week. That was the first time we've actually had that happen in quite a while.
Yeah, and you've just watched it. It just kind of leveled out and it's been sticking at 3% here or higher for months and months now. So, will it, just like Mike said, the Fed doesn't want to make the mistake of a resurgence in inflation a la the 70s. They don't want to have, we've talked about it ad nauseum, how Powell doesn't want to be, he wants to be Volcker, not Burns. I mean, he has a legacy here. I mean, he declared he's not going to resign and that Trump can't fire him and all that. But I think his focus is, again, how he is seen as the person the authority who has kind of ushered the economy through this the COVID crisis and out of it, and it really matters to him, in my opinion.
Yeah,
I think Mick Jagger said it best. I think Mick Jagger said it best in terms of Powell. You can't always get what we want.
Right.
How about I can't get no satisfaction?
That too. I mean,
we can bring the respect song.
Look at the chart of the dollar. I mean, the Dixie's bumping up against the top of its year-long range. I mean, it did go a little bit higher, almost exactly a year ago, and came right back down to this channel between 107 and 100, and now we're at 106.5. I mean, the dollar could break out to the upside. If it does, it's because people are buying it to take advantage of treasury yields because they're much higher. That is the reason. But the question that begs the question is, well, if that's true, then why are they demanding so much those yields? Why are yields going up if there's demand because people are trying to buy in? And it's an interesting question. The reality is, I think Mike is onto something. The world denominates stuff in dollars. As long as it's the denominator, people need to park their money somewhere. And we know that the entire cryptoverse stores their dollars. When they buy Tether takes the dollars and buys treasuries with them. So you have this interesting trade that every time there's a bull market in crypto, people print Tether in the Tether treasury to buy altcoins or Bitcoin, but mostly altcoins in the Tether case. And then Tether takes that and buys treasuries with them. Meaning what's good for crypto is good for treasury yields and allows people to do that. And therefore people then buy dollars. It's an interesting washing machine. And it used to be so insignificant. We could just kind of, talk about it, but it would be irrelevant. It's not so insignificant anymore.
No,
when you're in the top 15 of buyers of treasuries, your buys are no longer, irrelevant. They're now potentially the marginal price setter, or at least part of the marginal price setter. So it's interesting. So, let's start Monday with something where Mike and I agree.
I just want to mention this.
So we've brought this.
Yeah, we mark it down. It happens. We've got this is that 70s chart, by the way, just for people who have not been watching or have not been listening. This is to 2023 when you're comparing them, by the way.
So you're watching Arthur Burns up there in the front end, right? And then you've got Volcker in the back end.
Well, but let's be clear. You James, you've talked about this. Volcker had a 34% debt to GDP.
I know.
We're at 135%. We are 100%. Literally, you can't even compare the two. If you did what Volcker did now,
raise rates up to 20%.
I don't know what the word is. We don't have a word. We have recession. We have depression. What's the word for cataclysm?
I remember my parents in the 80s paying 14% mortgage.
So Scott, I got to follow up on this. Scott, I got to show you one chart based on what you said. It was in a chat this morning on the Bloomberg chat. And the guy I pointed out, crude oil's probably going to 40, gas in the price, average price of gas, which is 3, it's probably going to 2. Diesel, which is closer to 350, is probably going to 250. Just because we have a massive excess supply, we need to export it, and there's going to be a trade war. And he says, well, what does that matter with CPI? So I just showed you, here's crude oil typically versus the 60-month moving average. Always gets cheap. It's not cheap yet. Here's CPI. But the bottom line is the difference when people talk about the 70s is it's completely different. Number one, we had one major event that caused the inflation. But the bottom line is we have U.S. stock market at 2 times GDP. In the 70s, it was half GDP. So to me, when people talk about inflation, if I'm looking for a trigger, that's it right there. If we just get a little backup in the stock market, there's deflation. And you need it to keep going up just to keep inflation stable. Now that we're up a third on a one-year basis, sure, you expect PPI and CPI to stay strong, but that's how far away we are. And that's why I know people hate to hear it, but the Bitcoin beta to the stock market is usually about 3x. So this to me is, when you talk about inflation or deflation risks, is the U.S. stock market has to stay elevated. Everything else is kind of, in my world, is tilting, certainly commodities with gold going up and everything going down, is tilting towards deflation.
So obviously go ahead really quickly. I just want to say, so you've got what stops crude typical too cheap track. So there is a level at which the deflation or the disinflation, whatever you want to call it, of oil prices is problematic. But if we have tariffs that are going to be inflationary, but gas prices and oil are going to be coming down this much, can they offset and be healthy? So
That was
right. So
that was the thing what I published this morning. Also, the key point is tariffs are short-term inflationary for goods. In this country trades about 10% of our GDP. Most of the rest of the world who has to export to the US just to stay stabilized, it's closer to 20% of their GDP. So sure, in the short term, the more significant thing is tax cuts and fiscal stimulus. But that's my point is if you see gasoline go down to 2, which I think it will, that's pretty deflationary.
But does that
You see
bring down the prices of consumer goods? Like,
Yes.
will that
Sure,
counteract
it'll relate.
the inflation we'll see from the tariffs? That's the
Most,
question.
for instance, like food. Food's going down. Corn right now is $4. It's the same price it was traded in 1970s. It's dropped 50% from the peak. But most of the food you see in grocery
corn
stores is transportation.
$90,000 right now. Corn is 90,000.
Bitcoin.
I missed that one.
The Bitcoin.
Well, the point is, when you talk about foods, and let's talk about food. Food is a major component of CPI. A lot of the cost of food is not the actual cost from where you produce it; it's the transportation.
Yeah, the energy cost. It's the largest component of CPI without a doubt. It's the largest driver of it. And that's a really good point. We had the oil embargo way back in the 70s. There was a big that was the driver of inflation. That's exactly right. I agree. It's the question is just how much easing are we going to see? How much expansion of the money supply are we going to see in the coming 6, 12, 18 months? I'm betting we're going to see more easing. That's just, I think you're right, Mike, that if the stock market pulls back 20, 30%, that would probably be healthy overall long-term. However, we are a nation that is, we're an economy. The whole Western economy is addicted to debt. And it's a very difficult, it is going to be like landing a jetliner on a piano wire, to avoid an upward spiral of debt from all of this borrowing. I mean, it's if you have GDP come down, we're so financialized. You have GDP come down 10, 20%. I mean, then you're just talking about it. You're talking about expanding on those deficits, which I think they're not. All we talk about Doge and all we talk about the Department of Government Efficiency. I mean, I'm going to be talking about this out in New Orleans this next week about how difficult it's going to be to actually overcome these deficits. It's just, where can you cut? You're not going to be able to cut until you get into the bone to get past all those deficits. That we have too many entitlements. So, and that will only get worse if we have a recession. If we have a pullback, that only gets worse because entitlements get worse in a recession. And then you have both your expenses going up and your income coming down. And so this is what they're trying to avoid. But Powell's trying to avoid it without having a resurgence of inflation. Good luck. I would not want to be in his seat. That's my thing. I just wouldn't want to be in his seat because I don't see how he wins. And like Lynn Alden likes to say, nothing stops this train. I mean,
yeah. So let's pull this apart into two pieces. First, when I look at Mike's chart, I see the relationship between oil and inflation, and understand that I agree. I think drill, baby, drill. And I know you wanted to talk about this, Mike. We'll let you go off on it in a second. Means oil. I think oil does go down. I don't know if it goes down to 40, but it's certainly dropping. And I think most people believe that will happen. That directly impacts consumer inflation directly. And so that lowers inflation. The problem with the thesis of deflation is we're printing money like, the old money printer go burr meme. And so financial asset inflation is likely to offset consumer inflation, which, by the way, is exactly what they want. So, when the government wants something to happen, they're doing something and it's happening. They're not going to change that. So, there's this really interesting dynamic. I mean, stocks are stupidly expensive in the aggregate. Yes, you're right. 2 times GDP. The government wants it to be, up if they can, because they want the wealth effect. America in the 70s was a producer economy. America in the 2020s is a consumer economy. That is a massive difference. You pointed that out yourself. And so when I hear that, I think that the trend toward financialization is still here, isn't changing anytime soon. And so I don't resolve that as deflation, because you can't have deflation when the denominator continue to gets printed at the rate that it gets printed. And so it needs to go someplace. And that's where I think this cycle is the Bitcoin de-link from the stock market. This 3x beta is really, anyone who's ever traded will tell you, beta is incredibly unstable. And so beta basically means when something goes up, the other thing goes up more if it's 3x.
And it can be measured in a billion different ways.
Right. And so when you look at comparing NVIDIA to the NASDAQ, NVIDIA's beta is pretty high too, right? But that actually intuitively makes sense, right? When you look at Bitcoin to the stock market, when there are days like last week when the stock market dropped 2% and Bitcoin went up 5%, what the hell does that mean? And so, yeah, you smooth it out and you look at it. It is a really interesting question. Are we reaching the critical mass moment? The answer to that question will be determined by what happens with strategic Bitcoin reserves. And that's a totally different conversation. Let's table that for later.
Okay, go ahead. Yeah, I was going to say that we know someone else who has a strategic Bitcoin reserve. I do want to go back to oil later, but this is just getting ridiculous in the most amazing way. MicroStrategy has acquired 51,780 Bitcoin for $4.6 billion at $88,627 per Bitcoin. This has to be by far, at least for dollar value, by far his biggest purchase for MicroStrategy. $4.6 billion worth right here. But I want to show you guys something. I just saw this article come up actually on the block while you were talking. Marathon has announced a $700 million convertible note intention to acquire more Bitcoin. So now we have a Bitcoin miner that's going to follow the MicroStrategy playbook of raising debt to buy more Bitcoin when they're already buying and mining Bitcoin, right? So if anyone was curious if some of these miners are selling, I don't think they're selling if they're raising a convertible note here, obviously to buy more Bitcoin. I mean, finally, we have another company here that's going to do the same thing. Big enough to do it. Yeah. I mean,
it is worth pointing out, as I just noticed, that funding rates, according to CoinGlass, are back up to the levels, it's 0.0325. Standard is 0.01, so triple standard based on open interest funding rate. When that happens, recently, when that happens, that's generally a sign of a local top. That doesn't mean much. We're at 90,000. So, whatever, it always takes a while to get through these kind of, psychological levels, but people should be careful. It also, what it is indicative of is people seeing the MicroStrategy and the Marathon news and buying on leverage. Now, that doesn't mean it can't go higher because there could be spot buying underneath it, but it is worth those people trading the markets to understand that.
51,780 Bitcoin. What's that, like 4 months worth of mining at the current supply?
Crazy. So I got to riff off of that a little bit. This is the first time in my almost 40-year history in this business. Within 2 months, I had two fathers ask me about their son's holdings of MicroStrategy. They were concerned. I've just never had that happen before. Now, full disclosure, being said at Bloomberg, I can't really trade Bitcoin and things, but I was able to do proxies. So bought some MicroStrategy a few years ago, and I was kind of shocked how easily it got me a 10x. That was not usually my works. When I get a 10x in something, you usually don't want to be joining it, so I had to sell a bit of it because it became overweight. The key thing I want to point out is, just riffing off what Dave said a little bit, is I'm completely biased towards the key thing I've been saying about gold for years is you can't hold gold anymore without some Bitcoin in that space, or you're just missing what's happening in this world of rapid advancing technology. But the way I look at it, and still keep this same, as long as beta is going up at this pace, you're better off having that risk adjust overweight in Bitcoin. But at some point when we have some correction and downward drift in beta, which does happen, and obviously I've only seen it, some of us have seen this longer term, we are overdue for that, then we should see that test. Now, of course, Dave and you all think Bitcoin's going to outperform. I would love to see it, and it certainly has lately because we have this wonderful hopium of a new president, the crypto president, but we still haven't seen that period when we see a little bit of a bear market in equities in Bitcoin outperforming that. That's, to me, the macro big picture. So to me, that's at some point is going to switch, and that's bottom line why I'm still completely bullish gold. I don't see, when you talk about, debasing the currency or something, gold's been outperforming beta for 3 years now, the stock market, on a total return basis. And that's just not a good sign when all you hear, and I see on CNBC, is AI-driven stocks, yet the rock is beating it. Now, we see lately Goldman's tilting towards gold versus equities. That's kind of significant. But I don't. Maybe we should comment on that a little.
Yeah, I mean, I think when you look at that, and I've always been, I've always been somewhat of a gold bug in a sense. I just think that the monetary component of gold. I wrote a post over the weekend where I tried to explain to someone what the case for Bitcoin was, and the short answer is that gold demonetized silver, and effectively, if you look at it in the Earth's crust, it's 15 times rarer, and it trades at 85 times higher. And so I look at this and very simple math conclude that around 80% of gold's value and its price is its monetary price, its denominator to everything that's going on. And I believe that Bitcoin will demonetize gold, or at a very minimum equate to gold, because gold as a whole represents 7-8% of monetary aggregates when it used to be 100. And a proper denominator would be 100. So there's room for both. And I think that makes sense. But the bull case for Bitcoin is it getting into that league. And that's, that is something that is, Saylor talks about it, but he goes hyperbolic to all financial assets. And he also believes, and he may not be wrong, that financialization is, if anything, accelerating. And therefore, the terminal state of all this has to be higher. The problem with all the analysis that we do when we look backward is we're looking at a regime where we've been in the fiat era since 1971. And so you have a rich history of 50 years of financial markets to look at, during which financialization, which is what James talked about, has been accelerating the whole time. And so you kind of have to lift back peel back the curtain there and say, okay, what's going on? And so your point, correct, that the GDP, 50% of GDP, 50% to 2%, to 2 times, meaning relative to gross domestic product, to what we build, the stock market is 4 times more expensive than it was in the 70s, is an incredibly important point. The question is that structural because of financialization, which may or may not reverse? Because if it reverses, I mean, I don't know how the U.S. is a consumer economy anymore if you literally cut its ability to consume by 75%, which is essentially what you're saying. I'm not saying it's going to happen. I'm just saying that the if then else, as first year computer science would say, it's kind of a dangerous scenario. And so that's sort of why you get me looking at funny when you go through that, because you're not wrong. It's just if then else. I mean, what happens?
Yeah, and look, Bitcoin's got a bunch of things going on for it. The ETFs are maturing. I remember reading this weekend. Gosh, I can't remember who was writing about it, and I apologize. But he did an analysis. It looks like it's about, maybe it was Fred Krueger saying it was about 30x. It was Fred Krueger saying it was about a 30x multiple, trading friction on those ETF buys, meaning that the price moves by 30x the amount of dollars that comes in. So that's the ETFs being maturing is important. That's one thing. The hopium on Trump, well, it's part hopium that we get the Bitcoin reserve, and that's really more on Lummis than it is Trump. But it's also just a relief. It's a relief that this administration has been so antagonistic on the whole industry that it gives people the green light to go ahead and dip back in, and then you get to a price here that it's like, well, it's above that all-time high. That all-time high was years ago. Now it's holding it. And so institutional investors, not just hedge funds anymore, family offices, small institutions, they're starting to add to this as a small position, pension funds adding 0.5% or 1% to their positions. You do have the MicroStrategy effect where Michael has a 2.5 times multiplier on this thing. So every time he buys some, his stock goes up. It gives him ability to tap into his ATM and buy more. It's madness. It's a little bit of a money glitch. How long can that go on for? I don't know. What should the multiple be on MicroStrategy? I don't know. I think it's more than 1. I think it's less than 6 or 7. Who knows in between? He doesn't even know, and he'll admit that. So, but the reality is that you've got that going. You also have the gap accounting that's coming up in 2025, where you can actually mark your Bitcoin holdings to market, which allows more companies to buy it and put on their treasury without worrying about damaging or impairing their balance sheet. And so these are important developments, and it's not just that risk asset anymore. Is it maturing? Yes. Is it maturing rapidly? I mean, it's slow. And I think that the institution adoption is going to be really important in this cycle. In this next 18 months is going to be really important driver of stability in this price. And hopefully it'll help dampen out some of the volatility until we get to that ridiculous blow off top as usual. And then it draws down in an equal, amount of frenzy or pace.
Yeah.
So, wow.
It's worth noting on the corporate side that the law changed in 2024, but the way it worked is you have to start it when your next fiscal year started post-January. Mm-hmm. It's worth noting that a lot of companies have fiscal years that start November 1st, that end October 31st. And so I think that a part of the buying you're seeing is starting now.
That might be
so anyone who has a calendar year, you're right about January 1st, but it depends when the fiscal year is of companies, and different companies have different fiscal years. And frankly, the hell if I know where the majority is.
So James, I got to follow up with you. You nailed it on August 5th. Bitcoin dropped below 50. You're like, yeah, I'm buying. So great call. Great move. Dave, Scott, you all agreed. But I have to ask you now about position management. Even if you can answer the question, now you're basically up about 100% in 2 months, 3 months. What do you do?
Well, I mean, it's different for me because I'm on a Bitcoin standard in my hedge fund. I don't hold US dollars, and everybody knows that. That's what our hedge fund does. That's what our investors expect. And so I weigh everything on a risk reward to Bitcoin. So what it means, Mike, is that at this price, I'm probably more willing to use some of that underlying Bitcoin at a risk reward versus an underlying company that will benefit from the expansion of the ecosystem over the next 5 to 7 years. So it gives me a different baseline in order to reallocate to other opportunities that are longer term than right here. So that's one thing, and so
investing Bitcoin into Bitcoin companies.
Yeah, and I know that they're the ones I'm investing in, I expect for long-term growth, and so it's just a different risk reward, and so where does that risk reward play out? Now, I still believe, Mike, that if we don't, I still believe that we ultimately do have more money printing, that we do have easing in monetary policy, that we do not see a massive drawdown in the market. And if we do see a drawdown, it's going to be short-lived and just opportunistic for us. And so I do believe that Bitcoin's going to take and hold this $90,000 level. It'll bump up against 100,000 a bunch of times. It may dip back down into the 80s or 70s for a minute, but then once it gets through 100 and holds that, I think that's it. It becomes just self-fulfilling. You know what it's like. All of you and Dave know exactly what it's like. Scott, you've been watching this for a while, but institutions, they want to know that there's stability in the price, and then they'll start dipping in and really start accumulating after that, and it just becomes self-fulfilling. And when it takes $100,000, I mean, this is an asset that cannot be denied anymore. I mean, you're talking about something now. You pull up the largest assets in the world, right? And there's the list of them, Scott. I can't remember what. I have it. Yeah. I mean, the largest assets in the world, and Bitcoin's hovering around 7 or 8. It's on the day. It's right up against Saudi Aramco. I mean, this is the largest energy company in the world.
It had passed it, by the way, when we were at 93.
I mean, look at this. It's right there. Yeah. It's above silver. So it can't be denied that this is an actual asset now. People talk about tulips, they talk about risk. It is up here with the risk assets, and I will absolutely admit that it has been the tip of the risk sphere for a very long time. However, what people are getting their heads around is that I got to do some work on this, because this is real. Like, it's not going away. Like, they've declared it dead countless times over the last 10 years, and here it is again.
So can I follow Scott with one of that? So we all know how history is going to view Bitcoin. I mean, not for certain. You can't judge history, certainly, but I agree with Saifedean Amis's book, The Bitcoin Standard. The question is, how's history going to view Doge and Shiba Inu?
Yeah.
I knew I'd have to. I mean, honestly, what we're going to look at that and say, yeah, well, it was kind of silly, or
I think they may view Doge differently than Shiba Inu, actually, just because of
Right.
the current status of the government. I think that Doge has potentially memed its way into extreme long-term relevance, for better or for worse. I mean, when you have a government agency, or I don't know whether it's officially an agency or not, but that is called Doge, in a presidency with Vivek and Elon running it, I think that Doge may actually somehow find its way into a relevant part of the conversation.
And it's a proof of work.
Shit, I don't think so.
It didn't have the immaculate conception, but it was made over the weekend as a joke, right? I mean, so I think to answer your question though, Mike, on the meme coins, I think this cycle, and I was talking about American Hodl about it with him the other day. I think this cycle, investors, traders, fast money, they are admitting that this stuff is just nonsense. They're just trying to pick a fast horse to get some money out of it. I mean, that's just they don't think that there's really any utility, and there's no. That was
the point.
There's no pretense that this
that was the point.
Rock. What's that?
By the way, there's an interesting conversation there, James, which is that we had this, I would say, 6-month period, whatever, that really peaked in March and April, but meme coins now, Google searches are the highest they've ever been. But we had this period where the SEC and the United States government pushed so hard against everything crypto that people started launching meme coins specifically with no utility to say, hey, these are actually fine from a regulatory perspective. We can do whatever we want with these. They were sort of a pushback against.
And we can actually put the senators' names on them.
But we don't need to do that now. So it's actually an interesting place for meme coins if you don't need to only do meme coins to be, squared with the regulators, and you can actually start to launch things. I mean, we had the rumor last week, obviously, which I will put my money against happening. But the rumor last week was that Trump is going to make any crypto launched in the United States, or anyone who brings their company back, tax-free. Literally no capital gains taxes on anything launched in the United States. I don't see that necessarily happening, but you don't really need to launch meme coins if you can launch anything you want from a legal company in the U.S. I'm not saying
I think BlackRock would push against that. BlackRock would probably push against that, unless there's a way that it would work with the ETF. And Dave, you're a little bit, you're much more, attuned to the inner workings of ETFs, but I don't know how that would work. So, I just. The point is, though, I think this cycle, Mike, people realize that these meme coins are just meme coins. There's nobody even there's no even trying to pretend that they have value. It's just like, this rock is a picture of a rock. It's a JPEG. You can copy it and put it on your profile if you want to. And it's not worth $2 million, but maybe we'll trade around it because it's a fun thing to trade around. I
just think Doge maybe will transcend the meme coin category as a sort of standalone asset because of the government and how long it's been around.
Yeah, no, I wouldn't.
I don't think you can compare Doge to like cat with dog face, fish,
dog Wi-Fi hat. I know. No. Yeah, exactly. Yeah.
I mean, Dave, we've talked about that a lot, though. The fact that meme coins were sort of a pushback against Gensler. And if don't have to push back against Gensler, does that mean we'll see people start to focus more on utility or launching things that at least have some sort of purported use case?
Well, I mean, yeah, I couldn't help it. I couldn't find I just used Grok to draw a virtual image that we're looking at. But
yeah, it's amazing.
There is a long-term thesis and a short-term thesis. The long-term is, if you are a meme coin that is going to be worth anything, and these guys are worth billions. So, I mean, this is just kind of crazy. There will need to be a way for the holders of those coins to participate in some sort of monetization, community benefit. They're going to need to transition. In the short term, the people who built these things built it specifically so they wouldn't. And so meme coins are more or less like fractional ownership of Beanie Babies. And there's nothing wrong with that. I mean, there's I always use the analysis on NFTs, Birkin bag versus Beanie Babies. I mean, Birkin bags, you can buy a Birkin bag for $40,000. It's, $30 worth of leather and packaged in a way that people pay a lot of money for it. And that's held their value. Whereas Beanie Babies, and by the way, I think it's actually a decent movie. where Zach Galifianakis plays Ty Warner, whatever it was called, I can't remember. People for $1.50 worth of fluff bought things and spent, thousands of dollars, right? For particularly rare Beanie Babies. Now, when it comes to meme coins, where there is, depending on how the supply is organized, you're basically buying fractional pieces of that. Is that really a sustainable trend? I mean, maybe. I mean, who knows? I mean, I don't know. But what is a sustainable trend is if you have a community of people who are logging into something and putting their eyeballs there, and you can monetize it and create merch and other assorted stuff, then it's fine. I mean, but if not, then those things are going to zero. It may go to zero in 30 years, but it will go to zero because you have to have some value, right? And that matters. Now, the thing that I found amusing is I don't see how Dogecoin benefits from a Department of Government efficiency unless there's some way to make that bridge. I mean, it's no different than Long Island IT from Long Island to the Long Island blockchain, right? And so, it is what it is. I mean, people just are jamming into this stuff, and it's the great washing machine of money. I mean, and Mike talks about this all the time. I mean, this is just money, liquidity searching to find a home. And it should be the opposite. It should be liquidity flow to what's going to be the most economically relevant asset, but that's not what we have here. And so I think it is the question, all this stuff that we think is bullshit, what will happen to it? And I think Bitcoin is dramatically not bullshit. I think that there are multiple platforms that can generate, actual revenues into their platform, and that, to holders. But then we have all this stuff that there's nothing. And so who knows? I mean, I don't know. I don't want to get a lot of hate, but when you want to value assets, you actually have to know what the economics are going to be. It's like XRP is my favorite one for asking the question. And we can't have a show where XRP has basically doubled over the last week and a half, 2 weeks, give or take, right? It's pretty close to a double, right, Scott? And that is interesting because they're saying, well, XRP is going to get used for all these big bank applications. And so my answer to that is, okay, cool. That's great. What does that do to the demand? How much XRP is necessary, right? And so you need to understand supply and demand. I mean, when Mike talked about oil, it's supply and demand.
Yeah. And just to be clear, when I talk about Doge and I recommend Doge, I'm recommending Department of Government efficiency. But the issue is, the Department of Government efficiency. Good luck. I mean, so yeah, you need to know where the value is for sure. That's 100% accurate, Dave. But Scott, I like your
look. I just want to show you something.
Where's your background, Mike?
I know. I looked this up. So Dogecoin is the 428th largest asset in the world.
Wow.
Yeah, that's big, actually. 428th at $53.6 billion market cap. I think today it's about 50.
It's bigger than Vanguard.
I mean, it's
so it's
Vanguard is 435. Holy crap. How'd you see that? Vanguard right here, 435. That is astounding.
So it's a wonderful thing. I just have to interject some of the sensibility I learned listening to the Rolling Stones in high school, because they were like the top band to listen to next to Led Zeppelin and things. But just a headline on CNN: Trump vowed to make U.S. crypto capital of the planet. I do enjoy all this, and I do enjoy hearing the things that I've heard, similar stuff back during major asset market peaks, that all these crypto people are using SPYs and Qs as a store of value. Like, oh, okay, so it's just a massive Ponzi scheme that keeps going up. That's why my radar's on gold, and and when some of the alts realize that, yeah, they're just silly speculative excessive, that's great, and nothing wrong with trading to make it go up. But at some point, we know these things just don't last forever.
Well, I mean, keep in mind something. So, if Trump actually did pass a rule or got a rule passed that did what he said, that is a very big deal. The rule that they've talked about is American companies issuing cryptos can do so tax-free. What will that encourage? That will encourage a lot of new cryptos, which means that all of a sudden now there's a lot more supply. What ended the internet bubble? A lot of people talk about lots of things, but one of the things that ended it was a massive spike in IPOs. Yeah. And so massive incredible amount of supply hitting the market for all this crap. Now, does any of that have anything to do with Bitcoin? Not really. Does it have a lot to do with everything else? Yes, it does. I mean, put yourself in the situation of a U.S. based crypto company that's languished for 4 years. That all of a sudden now, not only could you, where you basically couldn't issue a token as any form of financing, now all of a sudden the administration says, you know what? If you're a U.S. based crypto company, not only can you issue a token, but here we're going to help you and make it tax free to anybody who buys this thing. Well, if you're a U.S.-based crypto company, you're going to issue tokens. I mean, I kind of sit on the board of a U.S.-based crypto company. And if that rule came in, we'd be crazy not to issue a token, right? Just think about that. Think about what that actually means. Of course, it also means the value of U.S.-based crypto companies that have done nothing are probably higher today than any other time. But it's also quite possibly won't be able to pass that. So we have to adopt a wait and see. But it is a big deal. And supply and demand, we'll be talking about this as these rules come to fruition, what that happens. And, you guys were talking earlier about Treasury Secretary. I think that's kind of an interesting conversation, too. I'll pivot to that.
Let's talk about appointments, because I think that's a good conversation. So what were we saying about Lutnick there, Dave?
Well, I mean, look, I'd rather let me go after, because you guys had some interesting comments that I want to piggyback on the why, but rather than me saying everything. I mean, what did you say about
James, you were talking about Lutnick for Treasury. Mike, I think you were talking about effectively oil, but maybe James, start there, and then we'll go to Mike and back to
look,
James.
I have not done enough. We know who these guys are, but I haven't done enough research on what their recent statements are and what their recent positions are. Lutnick, Mike, you can get into that because you have a better visibility there. But he would not be your typical pick. It's just not. That would be kind of a, not an outsider, but he would be known on Wall Street. So it's going to be interesting to see what these guys say in their interviews. And the most interesting part about this whole conversation, actually for me, is that you had Elon out there saying, "Hey, can you guys give me comments and who you think should be nominated?" And like on a tweet, an X post. And so it's really interesting to see people weighing in on that.
Mike?
Well, the inside scoop on Lutnick, this is not my view, as I point out facts, is I started trading treasuries in 1988, and I've been working for a number of primary dealers. I've never heard anybody in the treasury business say anything nice about him. He's just very widely hated, and maybe because he's this tremendous businessman, and he makes it very difficult for people like me who used to do business with his firm, and I paid him a lot of commissions to Cantor. I still have my $4,000 sweatshirt from a friend of mine who died in 9/11 because I did a trade with him. It cost me $4,000 commission. I made money in the trade, but could have been $3,000. So it's just a unique thing that not that Trump's very widely liked in New York either. It's just kind of a unique thing. The thing is, Treasury, to me, what's going to be Trump's major goal? He's got a problem right now. The bond vigilantes are starting to show a problem. Yields are going up with the Fed cutting is what part of the reason Fed had to stop cutting, because this is not a good sign for inflationary expectations and the massive increase in deficit. James is all over that all the time. The point is right now we're kicking in where we might be having that point where yields going up is a problem. And the Treasury, he's going to need the Treasury do everything they do to keep bond yields down. Maybe that means they issue more bills and bonds. So whoever he appoints is going to have to help his main focus. He needs the stock market to go up. The key thing I wanted to tilt over that was a substantial statement that hit this weekend was the Trump, he chooses the oil fracking boss, Wright, as the energy secretary. And I had to mention that because the current energy secretary boss is Jennifer Granholm, who's a lawyer from California. Look at that juxtaposition. That means massive drill oil, massive supply, and already pre-existing trends of commodities, crude oil, gasoline, diesel going down. We'll gain some fuel, and pretty significantly. So if he can get a Treasury secretary to keep bond yields down, however he does that, maybe getting the Fed to buy them, issuing more shorter end stuff, that's pretty deflationary. I have to mention that because the word inflation and Trump are all in the same sentence. It's a complete consensus. So maybe I'm pointing out from this standpoint, at least what I'm seeing what's happening in Treasury Secretary and what's happening in energy is more potentially deflationary. It's just one of those things you do as a trader. When you see the market all leading to one side, maybe it's a little bit of signs it might go the other way.
It's interesting as you say that about Lutnick, because both Dan Loeb from Third Point and Kyle Bass both weighed in this past weekend saying that Lutnick, Bissent would be far more qualified and a better pick. So it's interesting that that's where Wall Street is kind of coming out on it on the front end.
Yeah, I think that it's really interesting. If you and Elon actually tweeted this, but if you know the history, I mean, the reason Howard Lutnick is his impression on Wall Street is what it is, and I had, well, like a lot of people, I had friends and colleagues who perished on 9/11, so I know the story well. I worked for a company called Jefferies for a while, in between Morgan Stanley and Salomon Brothers, and Jefferies was trying to compete with Cantor in the natural trading market. But Cantor Fitzgerald and Howard Lutnick have been innovators and frankly disruptors. People hated eSpeed, hated it because it took out a lot of the edge of the dealers in the market. So if you have someone whose reputation is as an innovator and a disruptor, has enormous appeal to Trump. And don't underestimate that, because that is his reputation. And yes, there are a lot of people who said he was sharp-elbowed while doing so. Speaking as someone with exceptionally sharp elbows over my career, I shrug my shoulders at it. I understand that. I do it to you guys on occasion. Sometimes I'm trying to moderate myself. I'm calmer than I used to be. But people who innovate piss off people. It's that simple. I mean, I can't tell you how many stories I have of people at Morgan Stanley while I was there building program trading, or at Salomon Brothers through Salomon Smith Barney doing other automation and building a central risk book. I mean, I've unemployed more Wall Street traders than most. I mean, hundreds of Wall Street traders I've helped unemploy by developing technology over my career. And trust me, every one of them, not everyone, but a lot of them are like, son of a bitch, kind of person about me. So I am quite confident that that's a large part of why people believe that way about Howard Lutnick, because I've heard the same thing. And I've never met the man, so I have no personal interaction with him whatsoever. We probably know hundreds of people in common, one degree of separation, but that's the reputation, is disruptive. I think that's a qualification in this administration as opposed to a detraction.
Move fast and break things on steroids is our new government.
Yeah,
right.
and so it's interesting, but Mike, I think what you pointed out, obviously, about a lawyer from New York versus a fracking boss. I think that bipolarity is present across almost every appointment.
Yeah,
and that's the story,
exactly.
Because actually the current administration had pushed so far in one direction that those people were not moderate. Now you're getting the natural pendulum swing to the farther side of the other. So it's going to be probably, I haven't been alive as long as many of you, but this should be the largest gap between the appointments and generally just what the government does than we've probably ever seen before. I mean, like a Bush senior to Clinton switchover really wasn't that big a deal because they were both sort of in the middle.
Yeah, they were much closer. I mean, listening to Vivek talk, a year and a half ago, I couldn't help but smile when he talked about taking a chainsaw to government, which then Milei in Argentina campaigned with, and I don't know who came up with it first, but it is fascinating to watch what's going on. Now, if you ask me, and you've heard it on this show, I really do believe the only way out of our debt hole, and I'm not saying it's going to work, but I think the only path, I feel like Doctor Strange in Avengers Endgame, but the only path that works is a massive wave of deregulation to create economic hypergrowth, leveraging AI, et cetera, because otherwise, with 200% debt to GDP, which is what we have if you factor in Social Security and Medicare, you can't escape that. I mean, Japan has been printing their way to live with it for 3 decades, but you can't escape it. The only way to escape it is hypergrowth, and the only way to get hypergrowth is to unleash a wave of innovation. Now, can it be done? I honestly don't know. I do know that's the only possibility, though.
Well, what's making people nervous about Lutnick is that I think in his speech at the RNC, he was, or at Madison Square Garden, he was talking about how in the 1900s we had no tariffs. I mean, we had no income tax and all tariffs.
Only tariffs, yeah,
only tariffs. Yep. And so that's kind of making people like a little bit like, well, hold on, let's think through this for a minute, But Dave, I don't know what unleashes that massive productivity. I mean, it's hard to like that. We're in a tough spot. We must have GDP expand. And people say, well, there's an AI, there could be an AI explosion here. There's the AI miracle, but AI is deflationary. So what does that do to your GDP? That's
greatest expansion in human quality of life ever occurred during a period of deflation. It's called the Industrial Revolution.
Right.
And that's what they're trying to replicate. And I think that you're right, though. I think that trying to use history as an exact repeat is a fool's errand. It rhymes, it doesn't repeat. And I think there are and we could dive into that. I don't want to do that now. There are many ways of looking at it, but just as a general form of policy, disruption is necessary. There is definitely a need for disruption. Now, the question you have to ask yourself is, what does the Treasury Secretary have to do with anything? Treasury Secretary needs to print and potentially needs to trade. The one thing you get if Howard Lutnick is Treasury Secretary, without any question, is just like when Robert Rubin was first sworn in as Treasury Secretary, and I had the pleasure of working with him. I mean, I had 2 meetings with him, so I'm not going to say I know him very well. But before he went into that administration, was you end up with a trader in that seat. If you have a trader in that seat, then this whole notion of a Bitcoin strategic reserve, you could expect 2 things. First, they'll do it. Second, you won't know about it until after they purchase a substantial.
There you go.
front run the news, of course.
That's been the key thing that's been missing at the Fed in my career, is someone who had a little more trading acumen. And you're right, he sure knows trading.
And so we need to understand what that means. So what does that mean? That means buy Bitcoin for the long term, but understand that you're not going to hear boo about it until the U.S. government is already in position. Because why would they? They don't want everyone to front run them. Because the instant we announce, if you did something like pass the Lummis bill without actually doing anything, every other country in the world that was thinking about it will buy it before. It's sort of like, ask yourself the question, and a lot of your audience doesn't understand them, but ask yourself the question, why do institutions use dark pools to trade? And the answer is institutions who are buying positions in less liquid stocks always try to keep that intention to buy a secret until after they're forced to disclose that by a Rule 13F 90 days later or whatever the hell it is. And the reason is because if everyone knows they're buying, then the price is going to go up before they get to buy. Right. It's the same reason why CoinRoutes built algorithms to hide when our clients are buying or selling until they're done. And then they can tell you or not tell you. And the same reason, and by the way, Coinbase that Sailor uses does exactly the same thing.
Yeah, and there's iceberg orders have become pretty standard across most crypto exchanges. Yeah,
back in the day, large hedge funds would float around a block of million shares to sell, and while that was floating around, they would step into the market and start buying it.
I mean, that's called spoofing. You're not alled to do that theoretically.
You can't do that anymore. They would literally float. I got 1 million shares to sell, float around to the big. JP Morgan, Morgan Stanley, Merrill Lynch, Goldman, float that around, and then say, the price is not right. And then as they're in there buying it, day one, and
day one story.
That stuff happened.
Day one story of the first day I was sitting on the OTC desk at Solomon Brothers. Day one, literally day one, and I was talking to the traders, and I was watching them train a new trader. And so the new trader says, okay, when you get a buy order to buy 500,000 shares of Microsoft, what's the first thing you do? The guy said, oh, no, start bidding for Microsoft. He goes, no, you put your quote offering Microsoft heavier than where your bid is. That was day one. Literally what they taught. Now, that is actually illegal now, but that was how they trained an entire generation of traders.
When I started trading crypto, I thought that sell walls meant that, you were in trouble. And buy walls meant that that somebody was buying heavily, until I watched enough to realize that a sell wall was just someone holding price down so they could buy, and a buy wall was just somebody selling and then letting the floor out from underneath. It's literally the opposite once you take a look at the
it's a classic Wall Street trader mantra when the junior says to the boss, I want to buy this stock, and the boss says, okay, sell 500 shares, and the trader says, no, I want to buy. He says, just do what I said. So that was easy. Okay, now buy 5,000 shares. Just want to test the liquidity first.
You got to push the price down to where or up if you're going to short, but you got to push the price down to where the liquidity lies, and that's where people's stop losses or buy orders are sitting.
I can't tell you how many times Instinet was called and said, "Oh no, I put the offer in. I meant to make it a bid." Uh-huh.
Yeah,
It was an error. It was an error. Cancel the trade.
But sorry to go down the rabbit hole, Scott. But the point here is with if there is a trader at the helm of Treasury, expect that changes market dynamics, right? It just does. And it's worth understanding what that will be. And we'll be talking about that when and if there's an appointment made. And then, of course, obviously, the other appointments that are going to have very large effects on our industry are SEC and CFTC, as well as OCC and FDIC, because of the continued existence of Operation Choke Point even now, which has been documented on X, and you've seen it, James. I know Caitlin Long is still out there pointing out what's going on up till the bitter end. So, there's a lot of these appointments are going to matter a lot, but they do seem to be moving at a significantly faster speed than prior administrations.
They're ready for it this time. Obviously, I think there was the sentiment that nobody knew Trump would win last time, and it took months and months and months to get these appointments in order. This time, they've been long ahead of it, and he, I think, has the mandate to get done what he wants. I mean, the inevitable consequence here, the inevitable situation will be that we will deregulate everything, probably push too far in the other direction, and then in 2 years, the Democratic voters will be pissed off, and we'll get either Congress or Senate or something.
But that's a key point.
Get done. And, it's just how it goes every time.
Scott, that's a key point. Let's not underestimate the human nature of this emboldened human being who's now our president. We've got to go with it. He survived a couple assassination attempts, major impeachments, and everything. Now he's got a complete carte blanche. He's got 2 years minimum, and then it's all about his legacy. What's he going to be doing? And this is going to be hit the ground running as much as we've ever seen. It's just exactly what At War with Ourselves by Mr. General McMaster expected. You're going to get a complete U.S. government that's nothing but yes men. They're going to do what Trump says. And one thing I have to really give him credit for, his complete flip on cryptos. Remember 5 years ago, cryptos were horrible. Remember what Manchin tried to do right before he left Treasury Secretary? Now it's complete flip. That was impressive how he did.
Yeah, but I think
180 on that.
I think he's listening to Vivek. I think he's listening to to Elon. Like, he's listening for the first time. That in my experience, and not just being the bulldozer. But
right.
The reality is, and what the long bond is telling you, is they expect him to pour fire on the economy one way or another and ease somehow or other in order to expand the money supply and liquidity to make this thing rip during his administration. That's what he wants. He wants the economy to absolutely rip. Whether that's in nominal GDPs or real GDP terms, that's the question.
So, but
right.
if that's the point. To make the rip, though, he got to take a little pain. That's my point, is before you get to the end of his career, do it first. Do it right away. Like all these tariffs and things, that's going to be pain right away. The regulation takes a while to work through. So exactly. I mean, I agree with you. That's why markets price for perfection. Now we get the normal little correction. Just give me 100, the S&P 500 near its 100-week moving average, stuff that used to happen. Get that over with before it becomes towards the end of his term. And that's my thought is, yeah, he wants it to rip, but you got to take a little pain first.
Yeah, I think that, look, I would push back on the McMaster thing. I mean, listening to anyone who's ever run a company, you're going to have an employee who is unhappy, and they're going to say all sorts of crap about you. So I honestly don't really give a crap what he says. What I can tell you is Elon Musk is nobody's yes man. Vivek is nobody's yes man either. These are people who have actually created wealth and done things and have very strong opinions. And yes, they want to make sure they're aligned, but I don't think this is a yes man thing. I think this is a what the hell can we actually do? And I think it's going to be interesting because
and I think
in the Wall Street Journal,
JD Vance is going to quietly be influential.
That's right. The Wall Street Journal is saying something. The number 2 most popular opinion piece is opinion disruption won't work at Treasury. So you have the traditional financial markets that. From their perspective, this group of people who are now going to be running the country are something they haven't seen before. And it is a difference. And I'm not going to say they're not going to break a few eggs as they do it. All I'm going to say is it's the right thing to do. I mean, they're specifically taking on the tweet that I mentioned, where Elon said that business as usual isn't the right thing to do. And they're specifically saying, well, no, it is. We need business as usual because that's what reassures financial markets. And by the way, that we've believed that for a long time, right? A lot, when you talk about the Fed, people want to know what's going to happen. And so transparency, this isn't going to necessarily be, a transparent everything even keeled kind of thing. The U.S. economy is like an aircraft carrier, and they want to try to steer it like a motorcycle. And it could be very interesting, and we can see what happens.
I would have used speedboat there.
Yeah, whatever. You get my point. My point is that we don't know. What we know is what they want to try to achieve, and what they want to try to achieve is turning America back into where it was 50 years ago, which was a manufacturing powerhouse that builds stuff, as opposed to a financialized marketplace that consumes stuff. And that is not a trivial transformation, but that is literally what J.D. Vance's entire book is, entire economic policy is about. And it is going to make a lot of people uncomfortable. And there are huge pathways to investment in that. Some good, some bad. And we'll see. But let's see where it is and talk about specific policies as time goes on.
Well, one thing I know is that this isn't going to stop. On Friday, I know we got to wrap, but on
it's not
Friday,
official, but that's estimated that we've crested it. But
yeah, but I was not, I was on with NLW on Friday here, and we jokingly happened to put it on, and I watched it past 36 trillion. I said,
Wow.
Happy 36 trillion debt day to those who celebrate. Well, we got an extra 9 billion now since Friday. No big deal. And last I checked, when you've got your debt per citizen at 106,620 and your revenue per citizen over here in tax revenue at 15,000.
Yeah.
I don't know who fixes that. Nothing stops this train, right?
Nothing. So all that's telling you is that we're spending, $4 billion more than we're making every single day. It's nuts.
God, if only I could do that. Life would be so much more fun. Hey, here we are having to be fiscally responsible as the United States citizens. Guys, 10:05. Thank you. That was an awesome show. Mike, we're going to teach you how to get a Doge background at some point. I learned in real time, if we're being honest. I usually just do this, but I learned in real time. Guys, that's all we got. We will absolutely be back next Monday. That was an amazing show. Appreciate you guys showing up. The best part about making content in Macro Mondays at this point is that we're going to have a hell of a lot to talk about for a while now. I mean, there's going to be no dull weeks, I don't think. So that's all we got for you today. Dave, Mike, James, give them all a follow. Thank you, guys. We'll see you next week. Bye. Dave for president. Look at that. There you go. Dave for president. Bye.